Hello traders, and welcome to today's live event. It is February 7th and we're a couple of hours into the trading session. The last time we met, we were getting ready for the FOMC statement. We had mega cap tech earnings coming out, lots and lots of news last week, along with a new all-time high. So I'm going to go over my pick very quickly from last week. It was RTX. That was the long that I had suggested. And the live event was somewhere in here. The stock has been able to move higher, although not dramatically. I'm going to zoom out and take a look at that daily chart. You can see that the stock has been inching higher. It's okay. It's what this stock does. It grinds higher. Very quickly, my IBM pick from Sunday evening. We are still waiting on that to set up. The stock has continued to drift lower, so we're just going to keep setting alerts and waiting for that stock to trigger that alert. Now, when it does trigger, we don't want to see a lot of this gap filled. We want it to find support here. And then once it starts to rally up off of that support, that's our bullish flag that we're looking for. That's when we would be looking to go long. Hello, Harry. Say hi to everyone, and let's hear about your pick.
Hello, everyone. My pick was, last week, Lulu Short. And I've forgotten the price point I had mentioned last Wednesday, but I think it was around 468, somewhere around there. And if you closed it at any point since last Friday, Monday, Tuesday, you would have made a profit. I closed it early. I went all to cash, but that would have been a good winning position there, particularly on Monday and Tuesday. So Lulu Short, I still kind of like Lulu Short. It's up today. I'd hold off on, if you took it, you should take profit now. But it to me, it still looks pretty weak, and there's a kind of a bear flag on the daily there. So Lulu Short, and then I took a UNP long. UNP's clearly taking a little bit of a breather today. The market's up, UNP is flat. So, but I still like the daily chart on it. There's some ascending trend line resistance on the stock, but again, it's ascending trend line resistance, so I don't really pay that much attention to it. Those are much easier to break than descending. So, looking around, the market definitely just sort of a nonstop freight train at the moment. But this seems to be getting a little frothy up here.
I'll get into some quick market analysis here so that we can get our bearings. So along the way, you do want to find areas where you take gains on your swing positions. We're still very, very bullish. Heading into last Wednesday, Monday, and Tuesday, I was suggesting to everyone that they take profits on their swing trades. This is a prudent thing to do. We had major news coming out. We had all the mega cap tech companies announcing earnings. We had the jobs report on Friday, which, by the way, was fantastic, except for the wage component. We had the FOMC statement. So all of that news was packed into 3 trading days. It's prudent to take your chips off the table, see how that news plays out, and then you can get back in. So on Friday, we had a nice breakout to a new all-time high, and that was on the jobs report that we had gotten. Okay, you're only in day trading position because you don't have any swings on. We're still able to capture this entire move. Today would be the first time that you're a little out because we had a gap up and we've continued to move higher. So this is the first move that you would have even missed just by being in cash. I am waiting for any kind of little sideways compression or any little dip in here. So I'm still in day trading mode. I don't trust how frothy this market is right now. And so when you come in today and we get this compression, I would not have been a buyer here because the chance of a gap reversal off of an all-time high is very, very high. This is where FOMO Joe is at his best, rushing in to buy everything in sight, and then the rug gets pulled out from under him. So we wait and wait and wait, and then we get this long green candle here. all right, well, this is going to get everyone excited, but is it going to hold, or are we going to see a long bearish engulfing candle? We don't know. And we get follow through. Okay, this tells us that the move is legitimate. Buyers are there. They're supporting it. We had some volume on this little spurt. Could also be related to a buying climax. So I'm still not acting at this point. Okay, I still would not trade it. Now we get this pullback. If we would have seen stacked long red candles and quickly gotten through VWAP here, that would be signs that we are hitting heavy resistance and that buyers have basically pulled their bids. They're no longer interested, and we would have easily taken out the VWAP. Then you would have to be very cautious and lean on the side of day trading on the short side even and looking for that reversal. That's not what happened. Mixed overlapping candles on the way down, nice support off of the VWAP. Now we're compressing on that VWAP, and we've got a bullish 1OP cycle. So in here in the chat room I had mentioned, we're finding nice support here. This is where you would want to start taking your long positions. Again, this is me personally. This is not chasing this stuff in here when I still don't know. It's staying in complete control, waiting for my entry point, and I get it here. So I didn't miss much by waiting. But now I've got the confidence to take those long positions, and I have more time to find which stocks maintained that relative strength through this market dip.
Let's not forget SPY 500 is a major milestone. And there's going to be some natural resistance at SPY 500. They're just, the same thing happened when SPY hit 400, same thing when it hit 300. It is, SPY 500 is an extraordinary milestone for the market. And the type that would be sort of, front page news, SPY hits this, market hits this level. So that's getting pretty close. We're $2.50 away from that. And so I would expect some major psychological resistance right there at the 500 level. And, you might even see a pullback and then it retests. I fully believe by the, end of the year, we're going to wait bye-bye to 500. But for the moment, it's just something to be cautious about as you're looking at maybe swinging any long positions that one more day like this and, you're going to hit that number.
Right. Yeah, it'll act as a magnet, and then it'll be repelling off of that level, and you probably will see some resistance at that point. But, those psychological barriers, those are also pretty easily breached. So we'll see what happens when we get there. I am in a bit of cautious mode. I don't know when we're going to see that round of profit taking. I only know that on gaps up, I am the most nervous because that's when we have a chance for a gap reversal. That's when you have a chance to get really trapped in positions. That's when there's a chance for the selling momentum to accelerate during the day. So gap downs, love it. That is our best scenario. We wait for that support to be established. Market tends to open on its low, close on its high. In a bull market, gives us time to find the best stocks. So those opens are what you should be really embracing right now. So on the right side of your screen, you're going to see the S&P 500 on a 5-minute basis while we have our presentation. So you can watch what that's doing tick by tick. And then we're going to be looking at charts. And before we get into it, Harry is going to tell us about his latest challenge that he is embarking on. Been very, very popular. For those of you who are new to this live event, Harry is one of the only people that posts every trade real time across multi social platforms. I don't know how he is able to do it. These are actual trades. He also posts them in our chat room, and he posts his P&L. So there are not many people that do this. Harry's a fantastic trader. So please make sure to follow what he's doing on this challenge. So tell us about it, Harry. What are you doing?
Yeah, I'm doing the equivalent of sleeping on a bed of nails is what I'm doing. Obviously, is what, anyone who's followed me over the last year knows that I have traded, large size trades. They're, easily verify. You can see them in time and sales when you do 100 contracts, or 10,000 shares, or whatever. But a legitimate criticism is, hey, most of us have low balance accounts, and how do we trade that? Well, in the past, I've done 5K challenges and it had mixed success. You know, some of them I was able to double those accounts pretty quickly, and other times the accounts went bust. There was no consistency to it. And, you know, the reason for something like that is it deals with percentages, which is, you know, even if you, let's say you have a 70% chance of winning a blackjack hand, every hand 70% chance. So you're great at counting cards, whatever it is. You still need a decent enough bankroll to counter any type of downtrend, because you still have a 30% chance of getting screwed. Not that I want to compare trading to gambling, just for the overall idea of it. And if you have a $5,000 account, your best bet is to use it to make passive income until you get a decent enough bankroll size that you can begin to increase your account. Because really the only thing you can afford without taking a major risk is maybe one contract. You really can't do shares there either, unless you're looking at like $5, you know, share price, which you don't want to touch. So I decided to go to $12,500 account, which gives a little bit of breathing room. I use margin accounts. I hate cash accounts. And the goal there is to double it, to get to 25,000, which is your PDT level. And the first trade I took there was UNP, and someone asked in the challenge, Daniel, I see your question, I'll get to that, is why I took the UNP trade. And if you look at the daily chart on UNP, you had a nice bump on earnings towards the end of January. And then the stock just continued a very orderly, steady climb off those earnings. It's staying above all the SMAs. It's staying above the EMA 8 and the EMA 15 as well. You had a nice compression here that started on February 1st, and you were constantly staying at the high end, if not breaking a little bit above that compression level. Today, obviously, we're having some relative weakness in the stock, but it's not that damaging, so I'm holding it. But UNP certainly has a daily chart that I like. I use options that have a delta of 0.7 or higher in the money options. And anyone who doesn't do that, you're not really understanding options, because, you know, options provide you leverage, right? That's the whole idea behind them. You get leverage on options, but you pay a premium for that. You pay a price. You get charged for that. You don't just get leverage for free. The more closer you are to at the money, the higher your percentage that you're paying in premium. And when you're out of the money, it's 100% premium. So when you're getting a 0.7 or higher delta, you're getting as closer to 1-to-1 on the stock price as you can. When the stock price moves, that moves. You're also protecting yourself against a drop where if you're at the money or out of the money and the stock drops, your options can go down to zero. Whereas if you're deeper in the money, your options will retain some value there. So I had a lot of people ask, well, why are you using the money options? And well, you need to understand what options are. I mean, with their, you know, rather than the sort of gamble of out of the money, I'm going to take it for 25 cents, whatever, how they work. Because if you did, then you would be using in the money options. You would forego taking 4 at the money options in exchange for taking 2 in the money options. So I took that on UNP. I'm looking for some other ones. I'm being very cautious here because I do feel that while we are continuing up and I'm looking at the price action there, other than the jobless claims tomorrow, there's not much of a catalyst here. So we are it's kind of a melt up at the moment, but I don't want to, that's one of the reasons I went all cash. I don't really want to be in a vulnerable position to that day where we have a strong technical pullback. And, you know, that may or may not happen, but there's no reason to risk it at the moment. So that is why I took the UNP trade. I don't know, Pete, if you see something different in UNP, but I still like it all.
Which expiration did you choose?
I chose next week, February 16th, and I have the 245 calls, which at the time were 0.8, I believe, when I took them on the Delta.
Okay, so the 245 calls are 590, 620. So yes, those are in the money by about $5. So you're paying about $1 over. Just my only suggestion with this, especially with a smaller account, is that you've got to give yourself lots of time for these trades to work out. You don't want time decay working against you. And you don't want to also be in and out of the positions because of slippage. Again, you've got a small account. So to the degree that you're able to give yourself plenty of time for those trades to work out, that's really what you want to do. And this stock has a tendency to go higher, retrace, go higher, retrace. It's a grinder, as we call it. This breakout should accelerate that move higher. And it's the type of trade for a smaller account that you really would be looking more for. You can't day trade a small account, so you have to swing trade. If you're swing trading and right now you feel that the market might be a little bit lofty, a little bit tired, you might get some sideways price action, then your plan should be, well, I've got to go out 2 or 3 months right now because I don't know how long it's going to take for the market to regain its footing and to move higher. So otherwise, yeah, I like the selection. I think it's good. I think this is a type of stock that's just going to gradually move higher.
Daniel, I have endless problems with screening. Can you give me and us an idea how you approach screening? How long does it take you to find stocks from the beginning to the end? When and how you start in the morning? Well, nod to Pete here in his platform, Option Stalker. The pre-built screeners in here from relative weakness, relative strength, whether red royal flush, pop bear. I mean, there's over 40 different pre-built screeners, and then you have a custom screener that you could put in as well. But just even the pre-built ones, it takes a minute in the morning just to click on these screeners and see which stocks look good. I mean, I click right now on relative strength here, and immediately coming up are stocks like, let's see, Dollar Tree is coming up as a stock with some relative strength. ENPH is a stock with some relative strength. You have Home Depot comes up right there. I mean, Home Depot is an excellent long at the moment, particularly if you look at the daily chart. I love Home Depot here. I might actually take Home Depot for a long. It has some ascending resistance, but not much. So get yourself some good pre-built screeners that rely on relative strength. As far as I know, the ones built in here at Option Stalker are pretty much designed around the concept. So that's what I use. But it's really not that hard. I mean, you're looking for strong sectors, strong stocks in the sector, stocks that are strong against the market, that have good daily charts. And then at that point, you always say, get the market right, then get the stock right. And after that, the instrument you use, whether it's stock or options or whatever, is really almost the least important of them. But if you're having problems with screeners, there's no better screener I found than this one.
I'm going to go into what you were just mentioning earlier. You were in relative strength 30 and the other feature. So these are the best of the best. The scans look for different criteria within each search. We're looking for different things, and we explain exactly what each search is designed to find. Once we have these searches up, you can customize the columns as well. So you can right click and you can add any columns that you want. And I'll just pop it up. You can see 3-8 crosses, VWAP, ADX, breakouts, so much to choose from. I have my own selection that I like, but the advantage here is that at the beginning of the day, when you're looking for opportunities, you know that these stocks are all great. Now you can just visually go and look for all these green dots to line up. Mine are on our buy and sell signals across multiple time frames. Then I'm looking for real relative strength across multiple time frames. And if I slide this a little bit right, I'm going to reveal some columns here that show me which stocks have heavy volume. So HD, if you look at that, green, 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 all across the board, some heavy volume on an hourly basis. So I know it's got some volume in here too. Very easy. And this column I have, it separates my buy and sell signals from real relative strength. And this column is not often filled because it is the high of the day. And so that kind of gives me a nice break between them. And then I can easily see which stock is currently on the high of the day. And Home Depot was right on its high of the day. So that's one that I'm going to be looking at. And I'll zoom in on the 5-minute chart. And there we can see. I mean, look at how easy this is. It has to be. You've got to make fast decisions. You have to find opportunity quickly. That's what I've tried to build into Option Stalker. So yeah, you can see how higher, higher, higher lows. And what did it do when the market pulled back today? You've got this high, okay, that's at the 1030 bar. And so that's right in here. Yes, it pulled back for 2 bars and then instantly started to make progress where the market continued to pull back. That, folks, is relative strength. And you can see it right here, orange line above zero, relative strength. So as the market hits VWAP right in here and starts to find support at 1125, ding, 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 this is where you're in. And right now the stock is about 75 cents higher and just marching. That's how we do it.
I'm putting an alert on Home Depot. If I see a pullback at Home Depot here, protect me. My hope would be it could pull back to VWAP, bounce off VWAP. That might be my next trade in the challenge where I might look to do a call debit spread. And, maybe a 360, 365 call debit spread in Home Depot for the challenge. But I'd like to see a pullback first. Might not get it. But if I don't, no problem. Great, move on. But I'd like to see that. How do you discern between a pause in relative strength and a loss of relative strength? So let's see. Really quick. Someone said, I'm trying to find the 1OP indicator you showed early in the stream to demonstrate the bullish OP cycle, but I can't seem to find it in the studies. Well, if you just click on the study, click on studies, you'll just see 1OP. It's not 1OP1. Just go to 1OP that he was referring to. So you just click on that. So back to your question on relative strength. Let me be clear about something. We're not scalpers. We don't scalp here. I'm not saying we never scalp, right? We have bullish explosions. There was one the other day that was good, and you can grab it, and maybe it's a $15 stock, and you grab it, and you hold it for 10 minutes or something, and you take a dollar profit or whatever, and it's rare. We don't trade within the first 30 minutes, rarely when the market opens. That's usually when most of these YouTube traders make most of their big moves, is the first 30 minutes, and usually where everyone else gets burned, right? That's not trading. That's gambling. We're not gambling here. We're trading for a living. We're looking for consistent profits, consistent setups. Doesn't mean every trade is going to be profitable, but that you have a consistent return month after month after month. And scalping doesn't do that. In fact, scalping leads to a huge psychological problem. And I'll get to why scalping relates to your question of relative strength. It leads to a huge psychological problem, because the problem is inherent in scalping are momentum stocks. Now, being a momentum stock, you have a stock that, let's say it's at $7, right? And then bam, it's up to $9, right? It's a huge bump in the stock. And then it drops back down to $7.50. Then it's back up again to $10.50. So like, all right, it already dropped. I'm getting it. I'm buying it at $10.50. Well, then it drops $2. It's at $8.50. Now you're down, right? Now you just scalped it, but within 4 minutes, it just dropped $2. And this is what happens with momentum stocks. But you don't close it, right? Why? Because, that's what this stock is doing. It's volatile. Just because it dropped doesn't mean it's not going to pop back up. I'm not going to get out now down $2 only to see it go up to 12. So you hold it. And then it drops some more. Well, now you're not going to, now you're down 3. And now you're definitely not going to close it. And what happens is you get trapped. You get trapped into this mindset that you're dealing with a volatile stock, that, these drops are part of baked in. And so normally, if you're trading normally and you see a drop like that and it's below VWAP and it lost everything in your thesis for the trade, you get out. But not in scalping, you don't. So how does that relate to your question of relative strength? When you're looking at scalping stocks, you're looking very clearly at the 5-minute chart, right? And some of you even the 1-minute chart, even though you shouldn't be. And you're making decisions not based on the daily chart, not based on the overall trend. You're not even making decisions based on the market. You're making decisions purely based on the current volatility within a cheap stock, usually a stock that has news or a low float. Relative strength, you need to look at it overall. Look at the daily chart. Look at it how it's doing on the day. If you start looking at every 5-minute candle compared, oh, the market just dropped here and the stock dropped as well with it, it doesn't have relative strength anymore. All right, well, is it below VWAP? Did it, if you look at it overall, would you say that for the entire day it lost relative strength? Or has it lost relative strength just for a few candles? Now, there is a gray area there, right? There is a judgment call where at some point it does cross over to this stock did lose relative strength. But what is relative strength? Relative strength is institutional buying, just as relative weakness is institutional selling. It is activity in the stock that goes above and beyond the normal gravitational pull or push that the market might have. And so that is what you're looking for. You're looking for, did that institutional intervention into the stock cease? And you'll see that in volume. You'll see that in not one single 5-minute chart, but you'll see that over time. And there is that judgment call that you gain with experience. But if you're really looking at it on a 5-minute to 5-minute to 5-minute basis, you're going to just constantly get out of trades that you shouldn't get out of.
Yeah, relative strength, you absolutely need to have it on a daily basis on a D1 chart. And it is not going to waffle back and forth on a daily chart. And it's long-term money that's coming into the stock. They don't care what the market is doing today. They want to own this stock. So when most stocks and when most short-term institutional trading programs are selling the stock, that long-term buying is so strong that it offsets that temporary little buying. And that's the tell that we look for. So as I go back to Home Depot, and like I was explaining earlier, I'm going to do a overlay. You can see how Home Depot, orange line above zero, it has relative strength now. These are automated trend lines. You can see how it's breaking through these resistance points right here. So let's go into a 5-minute chart. We know we've got relative strength on a daily basis. So on a 5-minute chart, for some of you, it might be easier if I overlay the SPY. So I'm going to do that, and then we'll be able to watch tick for tick what happened. Market down, down, down. The SPY is that gray line. What's the stock done in that entire time frame? Up, up, up. Ah, all right. That's what I'm looking for. And in fact, that's what relative strength 30 search shows you. So in the last 30 minutes, the market's been down, down, down. What has been up, up, up? Well, Home Depot is one of those stocks.
So now, any opinion on F-cell chart? Yeah, my opinion is you should not be looking at the F-cell chart. Stop trading stocks under $5, period, point blank, done. No, don't do it. Just stop. And if you're asking because you own it, well, there's not much you can do, really. I mean, if you own it, just fucking hold it, I guess. I mean, that's just not a good investment there. But do not trade F-cell. There's no reason to trade F-cell. There's no reason to even be thinking about F-cell. Maybe a year and a half ago, F-cell was a stock that could be traded. But now it's not. It's like, what, $1.20 or something? Don't even think about it. All right. Well, I have an earnings question here, which is, again, caveated, not part of the method that we use. I held 500 contracts at Amazon through earnings. Why did I do that? I had reports, which I shared with people, because if I have access to information, I always make sure everyone else does, that Amazon was the #1 by far pick from the JPM institution. They were so bullish about it that even if the earnings missed, they felt that there wasn't that the stock was still undervalued at the time. So I was, nothing is certain, particularly with earnings, but that was one where I had an extremely bullish report on Amazon going into the earnings, and I did share that with people. So, okay. Meta and Pan W, are those on our radar today? Well, let's take a look, Pete. Meta first.
All right.
Meta.
So,
Damn this stock. Fucking Zuckerberg, man. I mean, he's got to be now probably one or two. He might even be passing Elon as a richest person on the planet, given his position size in the company. I mean, it's at 468. It's up $13 today. It held that extraordinary bump in earnings. When I say extraordinary bump, I believe that was in history the single biggest dollar gain in terms of value for a company in the market history in a single day happened in Meta. So, and the fact that you had a pop like that, and it's contextually important because it was held at 453, the bottom of that kind of gap there. Not only held, but even after a dip yesterday, it continues up $13 today. I like Meta. I think Meta actually is perfect for an out of the money bullish put spread, which answers another question about selling puts, and you don't have the margin to do it. You would take something like Meta, you'd go out to, let's say, March 1st, you'd go down to, where's the gap start there? 453, somewhere around there is where the gap is. So you go down to, let's say, 450, you sell the 450s, you buy the 445s for March 1st, and you're going to get $1.10 credit for that. The 450, 445 bullish put spread for Meta on March 1st, and you get $1.20 credit for that.
yeah.
In fact, I think I like that so damn much that it may go into as a trade for the challenge here. If I can get $1.15 credit on the 450, 445 bullish put spread on Meta that expires on March 1st, and I'm going to quickly see if I can get an earlier date, February 23rd. What do I get for that? The 450, 445. I can get $1 credit there. I might do that February 23rd for $1. Pete, what do you think? Feb 23, 450, 445 out of the money bullish put spread on Meta for $1.
I like it. Got accelerated time decay working in your favor. Again, I am not bearish. I am bullish. I'm just waiting for the market to digest some of the gains. So my overall market thesis is bullish. Yes, we could get a little dip in here along the way in the course of the next week or two. If it doesn't happen in a week or two, that's enough time for the market to catch up and to digest these gains. Then we're going to start stepping higher after that. And in that meantime, you've got plenty of cushion and you have 2 weeks till expiration. So yeah, it should be ticking away. Are we expecting Meta to stay flat? No, we're actually thinking it's going to continue to go higher. And time decay will work in our favor if the market just sits here. So yeah, I like it. There should be a support level for it. It's already proven that it's bouncing off of this level here today. So
I just got 10 contracts for the challenge account for a $1 credit. There it is, posting it now. Really like that trade. That's the passive income I'm talking about. You don't need to you obviously need to watch that support level at 450. But other than that, you don't need to do anything but let it just time decay, as Pete said, and make money. So yeah, I'm putting Meta in right now, and I got 10 contracts. If Meta stays above 450 by the end of February 20, whatever it is, 23rd, that's $1,000 in profit. That's what I get. So I'm putting that in now, and I got it for $1 credit. So there it is, my challenge trade.
And for just me personally, if I've got a big earnings gap like this, and that's a big magnitude right there, big move. So I like to give it, probably 5 to 10 days just to make sure that this is all going to hold. It looks like it's going to. I think IBM was one that I showed you last Sunday, and that stock is still kind of drifting down. Could I have sold that bullish put spread below this gap and been fine with it? Yeah, I would have been fine with it, but it's just kind of slipping. It still hasn't shown me that it's ready to lift off. As soon as it takes out this downward sloping trend line, I know that these gains have been preserved and that buyers are getting a little more aggressive. So I don't have to jump on it quite as early. But yeah, that's the finesse part of trading that comes into play. By the way, selling bullish put spreads, if you're watching a live event on my YouTube channel, please go in and watch those videos. They are about 2 hours long. It's a 2-part series that was recorded in 2015, I believe. So yes, this strategy stands the test of time. This is a bread and butter swing traders strategy, especially for people who can't watch the market all day long. You put the spread on, you have your alert set at the support that you're leaning on, and then you get the alert, then you might have to look at it and take action on it. If you don't get the alert, it's just going to expire worthless. So very low maintenance strategy. I had a question also. How do I know when to do a put credit spread? How do I know when to do a call debit spread? I have at least a 45-minute long video also on this channel exactly on that topic. So please watch it.
They also asked about PanW. Love PanW here. And PanW is actually a good exercise in all-time highs. If you look at the daily chart for PanW, right, it hits an all-time high on January 22nd. And then it kind of hangs around there, right? It consolidates. It stays above its 15 and 8 EMA, and it just kind of just compresses here for about 2 weeks until today. Boom, breaks right out of compression, up $20, just a huge jump. You have no bag holders up here, no one who's looking to sell, to break even, or to finally get out of the position. Everyone who took PanW early this morning is in profit, and there's no reason to close it. So I like PanW here, and that might be another trade that I'd be looking at if I saw a pullback in the stock.
And so this one I actually like even better. But the issue, and this is a very important issue, if I hover over the E, I can see earnings on February 20th. So I don't have a lot of time to sell an out of the money bullish put spread on this, because we always make sure that the options expire before the earnings announcement. Critically important. If you sell a spread that spans that earnings announcement, you're not going to make any money on it, because those option implied volatilities are going to retain their value. The exception would be if the stock shoots higher. Well, if that's the case, then you've got better option strategies available to you than selling an out of money bullish put spread that spans an earnings announcement. Let's say that the company had just announced earnings. So we've got that behind us and we got this nice breakout. I would be looking to sell that bullish put spread just below this compression right here. Could it come back and test that breakout? Sure. Would it go below this compression? Probably not, because we've already seen support there. And we're close enough to where the stock has not broken out a great deal to where you're going to get a decent premium for it. I'm not going to look at those premiums right now. I guess I could see where. So we're looking, the strike price would be around the 335 level. We're not going to get much for it because the stock is all the way up at 361, and the 16th would be the longest term option that I could go out to. And so if I'm looking, let's say 335, 330, I'm only getting 31 cents, 44 cents. There's not enough there for me. I could, if I were more speculative and really felt that PANW was going to go higher, I could sell a bullish put spread right at this breakout Again, this is a little more aggressive than I want to be because I'm looking for a market pullback right now, a little bit of a dip. I'm looking for at least some consolidation. I know I don't have a market tailwind working for me. So if I'm going to trade PAMW personally, I'd be day trading it, be doing some very short-term plays on it. So let me quick look at that high. Is it, let's say 430, 347.50s? You could look there and we'll just take a look and see what that spread is. So 347.50. And on the 345, I'd need to get 50 cents for it. That's certainly in range. So yeah, you could get that right here on the notion that the stock never looks back, never tests that in the course of the next 2 weeks. I like the stock. That could be one of mine. That was actually one that Dave Wise pointed out right on the open today. I like it.
Yeah, and once again, remember what bullish put spreads do. You're getting more money by selling the put than you are paying on the strike lower. That means your net is a credit. When your net is a credit, it is to your advantage that both of those options go down to zero. If they both go down to zero, you keep the difference, that dollar credit, you keep it, it's yours. So when you have a high IV situation, like going into earnings, the option prices stay elevated. In fact, the IV counterdicts the time decay. And you want time decay because time decay works in your favor. And as long as that price stays above your short strike, then your time decay is whittling those option prices down to zero, no matter what. Meta could drop $10 here and in the next week, and I can still be in a good position because time decay is still going to whittle away at the price. But if I had earnings coming up, then the IV is going to countermand the time decay and keep those option prices up, which means not only do I have the volatility of earnings itself, but I have the problem of the very reason I get the stock, which is time decay, is going to not be working for me. So it's always very important to understand how the options and spreads work that you're taking, or else you're going to be at a huge disadvantage.
Hey, I just wanted to interject here because we've got the market setting up here. Now you can see we have a lower high double top. Don't quite have a 1OP bearish cross in here, but we are testing VWAP. Very steady decline, nice and orderly. This tells me that there is resistance out there. Very good chance that we could see follow through selling here. They tried to rally it up. They tried to get through the previous high. Whap, 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 whap. So sellers are out there. And, if I'm just pure day trading, I'm looking for a sideways market here. I don't have any problem shorting. I have no problem looking at shorts. So I'm going to flip through a few shorts. Is there anything else you wanted to cover right now, or should I just start flipping some shorts?
I have some more questions, but I'll get to them. Maddie, I hope that answers your question on also selling puts, because you can use out of the money bullish put spreads to mitigate against that and your margin issue. So
all right. So here's a short I like right now, HPQ. Love it. You can see this breakdown through the 100-day moving average. Look how easy that was for me to find. It's on red royal flush. I've read across the board here, and you can see how the stock has been weak when the market has been rallying. Relative weakness, orange line below zero. Stock breaking down today. What's it done on a 5-minute basis? Well, early sell-off. Then it had a little bit of a spike here when the market challenged the high of the day. This is a nice, consistent, steady drift and a new low of the day. I like it. That's one I'd be looking to join, especially if this VWAP collapses here and I see a long red candle through it. That'll tell me that we're going to continue this little pullback. But until then, I'm just watching to see what the market's doing, because we haven't traveled far since the first hour, kind of in this trading range between 497 and 498. So let's make sure, and then let's keep an eye on that stock. So how will I approach this? Well, I could set an alert here. Let me find if I've got I'm just going to put a price alert. So I'm going to right click and let's call it, it's at 27.92. Let's go 27.80. Right click, create alert, price. and less than, and that price was $27.80. So $27.80. We're going to add that alert, save it. Now we're set. So let's see what happens.
You know, that's you don't have a big ATR there, obviously, on that stock. But you know, if you keep your position size proportional to it, you can make a decent percent return on a short like that. Let's see here. Views on D-Dog. Well, it's not a short, certainly, but it's not a long either. I don't have any view on D-Dog. You know, it's a bullish daily chart, but it's not popping out to me. It popped up. It's kind of hovering at that gap right now. Danger of a gap fill on the downside. But I don't really love it for a long or short. I wouldn't. There are much better trades out there than D-Dog, unless I'm missing something, Pete, that you see I don't. I don't see anything in D-Dog right now.
Your last comment just nailed it. I can find better. This is just choppy back and forth price action. You know, again, our job is to predict price movement. We are directional traders. If I can't look at a chart and tell you instantly if the stock's going higher or lower, it's no good. This thing is chopping around up here. It doesn't have a lot of relative strength. I'm not seeing any stacked green candles here. It doesn't have a big breakout that I can lean on. And, you know, am I going to try and predict the flight of a bat? Or am I going to try and predict the flight of a flock of geese in a V formation? This is not the choppiest worst stock. Believe me, I've seen a lot of those posted recently. But it's not the best stock either. It's certainly not PANW or some of the others that we've shown you. You know, look at that. That's nice, consistent price action with a big breakout. Yeah, I can tell you this stock is going to go higher. It's got buyers. TSM was another one that someone had asked about. This stock, it seems like it just moves in fits and spurts, and I suppose part of it is because it's in Taiwan, but you can see how it gets going and then it pulls back and it gets going. So on these big rallies up like this, you can see how almost every big rally that the stock has, you're going to get a dip. So I'd be more inclined to wait on a dip on this than I would be to chase this breakout. But it does look pretty good right now, especially in the last couple of days, and it's post earnings. So there's another instance where you've got the earnings gap up. You wait. You're just giving it time, as much time as you can. Takes out AV WAP-E. Now it's above it. Okay, I've got enough history here to sell a bullish put spread below that gap at 110. Or I can just flat out go long because the stock looks good.
I got to figure out what the hell my son is doing. So, you know, my son, 18, he's a freshman up in Berkeley right now. And all he wanted for Christmas and is money to buy stocks, right? So he buys stocks with it, which if I would have done that when I was a freshman in college, you'd be, my God, right? If any of us would have. In fact, that's probably the best advice I can give anyone who's very young. You know, trade. If you want to learn trading, great. You should learn it, particularly when you're young. It's a career, and it's a way for financial independence. But also, just buy good company stocks and hold them for investments. So he tells me a few days ago, telling me I should buy XYL. And I hardly even heard of this damn stock, let alone want to buy it. And so he's like, well, I'm buying it. And he buys shares of it at around 113. I think it was last Wednesday or Tuesday. Look at what the hell this stock did in the last couple of days, XYL. I mean, I don't know what the hell he's doing up there or how he caught this, but I'm going to find out. That is a hell of a trade by him. He does.
They're in water treatment.
Yes.
Applied water measurement control systems.
What the fuck? All right. Well, I mean, nothing would make me happier than for my son to outtrade me. And
So these are our automated trend lines, and look at that trend line breach. That is a gorgeous one right there on that earnings. And yeah, so it's continuing to power higher post earnings. It's continuing to go up today. Yeah, you can buy that. Look, the market's been down the last 30 minutes or so. Look what the stock has done. It compressed while the market was pulling back. This is another bullish sign. When it should be whap, 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 moving lower, it's actually holding all the gains. That tells you the buyers are in there. They don't care what the market is doing. And then now, as soon as the market finds support at VWAP, see it. Man, I like that one. That's a great.
I know. Way to go, Nicholas. Nice job. I'll let them know. Any thoughts on, Pete and Harry, any thoughts on Moderna? Nice hold and long shares. Moderna, my old friend. I wouldn't buy it until it is above 103. And actually, I wouldn't buy it until it's above 106. Let it get above the 200 SMA and finally stay there for a little bit. And then I think it becomes a good long. Other than that, it is just bouncing around between SMAs. Whenever you see a daily chart, and we talk about this with Tesla, and you saw what happened. If you have a stock that is hovering around between SMAs, don't, like the way Moderna is right now, wait for it to decide. Unless you're going to day trade it, there's like some huge gap between SMAs and there's a nice movement on the day. But overall, wait until it decides which way it was going to go. A lot of people were talking about Tesla long, Tesla, and I kept saying, wait until it decides which way it's going to break, and it broke down. So in Moderna, wait till you get that break above the 200 SMA, and then it has to confirm there. You see way back on January 7th and then 8th, it broke above it and then fell back down. I closed it way back there. And probably January 2nd, I closed it or pretty much at the top at around 115 on, it was January 5th that I closed it at 115. But wait until you get that confirmation that it is up there. My son's on Wall Street Bets. I changed the locks. If he, that's like the worst thing you could tell me that my son's on Wall Street Bets. He's too smart to be on Wall Street Bets. And
I'm going to show you another good. Oh, sorry, Harry.
No, go ahead.
Another good short. I actually highlighted it this morning when we had this gap up. I saw these 3 red candles. I'm like, all right, I'm going to show you a good short because in case we get that gap reversal, I want you to have something to look at. And PARA is one that I posted in the chat room. I love this upward sloping trend line that had been breached to the downside. And you can see how it just annihilated the 100-day moving average on heavy volume. This is where I posted it around 1320. And yeah, it's down at about 1281 now. And the stock is continuing to sink. So yeah, I like it.
I gave you all some inside information on Para, actually, or whatever you want to call it, last broadcast when I said it's popping on news that Byron Allen wants to buy Paramount for $14.8 billion, and then proceeded to say that makes this a good short because I happen to know Byron Allen, and I happen to know that he doesn't have $14.8 billion, and that sale is not going to go through. And look what's happened since the announcement of that sale, as investors clearly realized what everybody in the movie industry already knew, which was Byron Allen does not have $14.8 billion, nor does he have access to that money to buy Paramount. So as you see enthusiasm for that potential sale and the earnings reaction, but even before earnings, you see that drop occurring here. That's a good short.
Nice call. And I do remember you saying that. Yeah. Everything that we say, you should go back and verify because there's so much bullshit on YouTube, quite honestly. And that's why the videos and the live events, they all start with our previous picks. So we've got to stand behind what we've shown you previously. It's the only way for us to gain your trust and to show you that the system really works. But the rest of these clowns out there, especially the ones that are on the videos before my videos run, oh man, I watch 2-3 seconds of them and skip the ad as soon as I can. It is incredible. And that's one of the reasons that both of us are doing this. We're trying to give you a credible resource, a reliable resource. We're both successful traders, been doing this a long time. It's not some whimsical gee, I like this, or my gut feeling, or this is all based on an approach that starts with the market and then roots out relative strength. And then we use other technicals to confirm strength or weakness.
A couple of quick ones I can answer quickly. Sean Whitley, yes. So I sold on the bullish put spread. You sell the 450 puts for February 23rd. You buy the 445 puts for February 23rd. You receive $1 credit, or maybe now it'd be $1.05 credit for that trade. So that's how it works. You're getting a credit in return, not a debit. And Shalini, I no longer own shares of Marvel. I had 43,000 shares, and I sold those for a profit, I think 2 or 3 days ago. So that, I'm not saying Marvel isn't still a good long. It may well be. I'm just saying that I no longer own those shares. Okay. How do you incorporate the movement of VIX and SPY? Is it extra information that's necessary? Well, the movement of SPY is core. It's core everything we do. So if you look up and everything Pete's written, you read the wiki, you'll see that SPY is central to our entire trading philosophy, which is whether stock is on a daily and on an intraday basis, strong or weak, proportional to the movement in SPY. So there's the answer to your question there. As for VIX, VIX, I know it, I pay attention to it, I see it, but it's not really playing a big role in what I do, unless it gets to an extreme point, in which case I'll start noticing that whether or not VIX is due for a drop, pullback, or jump. But okay. Someone asked LSPD. Let's see here. LSPD. I don't think anything on Lightspeed Commerce right now. I mean, it's fairly bullish position, a daily chart on it. Nice bounce off the 50 SMA. But today,
it's got earnings today.
I don't see anything there. LSPD, do you see anything there, Pete?
I'm seeing earnings on February 7th. Yeah. So it's got earnings after the close.
Well, there you go. So yeah, I wouldn't touch it. Yeah, no, don't do that stock on earnings. Particularly, it's a low volume stock too. So what do I think about the gap fill play on SE right now?
Hey, Harry, I just want to talk about earnings plays, and here's my perspective on earnings. Harry's got a lot of fundamental information and a desire to analyze that fundamental information, and he does earnings trades. Personally, after trying to trade earnings for years and years, what I'd found is that my odds of success are far and away higher doing what I do day in and day out and not taking that risk. And then after the earnings announcement, there's plenty of adjustment to those positions as well, because they don't all work out as expected. So instead of wasting the time that I need on the follow-up for those positions, I'm much better off just staying the course, planning around earnings, avoiding them. It was slightly better than a 50-50 proposition for me when I did trade earnings. I want to be in the 85-90 percentile. I don't want to dick around with a 52 or 55% probability. So Harry's had much better success than I ever did with earnings announcements. So that's why he trades them. I don't also know that this is something that I could teach people, because fundamental research is much more complicated than technical research, and it's availability of information. And these guys have boots on the ground. They know every little component manufacturer for an Apple iPhone in China and how many parts they produced and what their outlook is for next quarter. I don't have resources like that. I don't have billions of dollars to spend on that. I cannot compete on a fundamental basis. Plus, the option implied volatilities are juiced to high heavens. So that's my take on it, and that's why I advocate avoiding earnings for everyone.
I agree. Avoid earnings. And if you think about it, imagine you're a professional poker player. And poker is probably one of the best analogies to trading, because you can gamble in poker. Clearly, most people do. Or you can take it seriously, learn the game, which doesn't actually take that long to learn, but takes a long time to master. and make a living out of it, right? And a lot of people have done that. Some are really good at it and they make millions a year, and some are grinders at it and they actually make a consistent living out of poker. Now, imagine you're a professional poker player and you're sitting there and you consistently pull in your, you meet your goal each night or each weekly goal. And then the player next to you goes, hey, how about a prop bet? Let's bet $500 on whether the flop is going to be more red than black or more black than red. Well, why would you take that bet? Why do a 50-50 when you know if you just continue to play and you continue to play the way you have been playing, you're going to make your living and earn money? Why take the prop bet? Unless you have some knowledge about how many spades or clubs or hearts or diamonds are left in the deck, and there's an odds of what's coming out, maybe what other people's hands are for some illegal reason, then yeah. But other than that, why take a 50-50 bet when you can consistently make profit otherwise, right? I do earnings because for me, it's not a 50-50 bet. But that's, as Pete said, I have access to an immense amount of information behind that. So here we have, what do I think of PayPal? Safe to hold through earnings? Again, like we just said, nothing is safe to hold through earnings. Unless, here's the problem, you don't know what is baked in and what is not baked in. That's why sometimes companies can beat their earnings estimates and still go down, because there are certain things that are baked in. They're looking for one particular number. They're looking for maybe gross margins on the, the projections for next year, whatever it is. Don't hold through earnings. There's, unless this is a long hold term, you're holding PayPal for like years, there's no reason to do that.
Barry, you've heard it a bunch of times. I know I've heard it so many times over my career. Pete, when I buy calls and the stock goes up, the calls go up, right? Yeah. Well, how come my calls went down on PayPal? Because you traded earnings, you idiot. And because the stock didn't make a big enough move and those options were juiced to high heaven, that's why you didn't make any money on it. So they inflate the heck out of the option premiums, because why? Think about it. That's uncertainty. If you're a market maker, or even if you're not a market maker, are you going to want to be out there selling calls on NVIDIA before the earnings announcement? Probably not, unless you can get a shitload of money for them that will offset the risk that you're taking. And the only way to do that is to have those option IVs at a very, very high price.
Absolutely. You just look at the at-the-money price of your option, and that's the premium you're paying. And so if you're holding that over earnings, that's your handicap right there. That's exactly how much more the stock needs to go and move just for you to break even on that after you have your IV crush after earnings. PLTR, is it going to go to 30? Someone asked. I don't fucking know if it's going to go to 30 or not going to go to 30. I do know that after earnings, it has popped and it continues to pop. I like PLTR. Getting a little extended from its EMA right now. Well, a lot extended from its EMA right now. So I probably wouldn't take it all the way up here. But I mean, I might miss the move. And I'm not saying that, can come next week, it's got 35. It's a strong stock right now, and response to earnings is strong. Response to the contract it got is strong. So right now, yeah, it could clearly reach 30. All I know is that it is strong at the moment, and a good plan.
And this is the price action that you want to find. These are geese flying in formation. Look at how tight that price action is. Beautiful. Can you predict that, yes, if I buy here based on what I've seen before, that the stock might be heading higher? It's got relative strength. It's got heavy volume. Yes, I think I can predict that the stock is going higher. Good. Then buy some and avoid all that choppy crap that's all over the place. The final thing on earnings is it's exciting. I'm going to put the trade on and I'm going to know instantly if I'm a winner or not. And that's why people do it, because there's just a gigantic thrill. Go to Vegas, you'll have a lot more fun losing your money.
You really will. I might go to Vegas in March. Someone asked about Oracle. It looked like it might break out here. Yeah, I like Oracle. It's a good trade. So, I'd wait for a more confirmed breakout of this compression, but I like the chart. I like it's filled the gap here from December 11th. You have some horizontal resistance right up here, though, that I'd keep an eye on. And that horizontal resistance comes in pretty much at 117.50. So I would, to be safe, I mean, there's no rush on a stock like this. It's going to start filling its second gap from 9/11. I'd put a 118 alert on this. I'm going to do it right now. Put an alert on Oracle for 118. And if it's over 118, I like it for a long. So there's your answer on Oracle. No need to rush into a stock like that. Wait to see how it's going to do and see if it confirms over that horizontal resistance.
Yep, I agree. And I just set that alert right there. So I'll get it on a GTC basis. I'm in Green Royal Flush. That's one of our searches. I'll look at all the stocks, go right down the column. There's Oracle. Hey, it's making a new high of the day and it's got green across the board. I would like to see some volume in it. You can see 0.77. So volume today is below average. Very choppy stock. Buy dips. The stock dips. Do not buy here. Wait for the dip. Wait for support. Okay, bullish engulfing candle above VWAP. Yeah, this would be a good entry point. So don't chase this thing. You don't chase up here. Wait for that pullback. And then when you see the support, this is where you want to enter on a stock like this.
Huh? Do I plan on holding net? I don't have 20 contracts right now. I like net. I know earnings are coming up tomorrow. Again, that would be based on the information I have fundamentally on it, not anything technical. So, no point going over that, but we'll see. CELH, someone asked about. I remember that being mentioned in the chat room, I think. CELH, nice break yesterday over the 100 SMA, confirming that break today. You have a bit of a gap here at 57.50. It approached to try to get into that gap today. It got to 57.34. So I would put an alert at 57.60 on this stock that tells me it has now entered into the gap. And when that happens, 57.60 alert on CLEH, I like it. But I'm bullish on CLH. I like this price action, and I like the confirmation of the SMA break today.
Dan, I personally wouldn't touch it. It's choppy. It's all over the place, up and down and up and down. I hate this kind of price action. I absolutely avoid it when possible. As far as this gap, it's not big enough for me to be interested in. I want a nice, big, hardy gap. But again, Harry and I are not going to see everything the same. 99% of what we do is going to be similar. And then it comes down to different trading styles. So yeah, I want something like we've looked at. I want to see PANW. I want to see CRWD. Some of the other stocks we've seen are much more attractive to me.
Tazzle, you deleted your message, but I saw it before you did. You mentioned NYCB. I'm going to have some harsh advice for you. Stop trading. Just stop. If you're looking at that stock, just stop. Don't trade. Go back to the basics. There's no reason to be looking at that stock right now at all. You said NYCB is trying to go green. Who fucking cares? Really? So what? I don't care if this stock goes back to 6. I don't care if it drops to 2. I don't care whether or not Jamie Dimon buys the damn place or doesn't buy the damn place. This is not a good trade to make. It's a news-based trade. It is below $5. It is dropping off of news. Will it pop back up? Maybe. You might be thinking, well, get out of the group you were in, Tazzle. A wrong group. Sorry. Well, then you are in the wrong group if you're posting about that stock, because that means you're in a group that's looking at that stock. And if you're in a group looking at that stock, you're in a group with a bunch of fucking idiots, and you should get out of it. Because if you're thinking, buy this stock right now because it's going to bounce off these lows and come up to 6 or 7, you are in a group of people that have an odd number of chromosomes. Get the fuck out now and start to learn how to trade. Sorry.
Yeah, no, it's so, I mean, we get these questions all the time, and there's currently possible bankruptcy here, insolvency for the bank. So we can see that the smart money feels that this is a very real threat. And you get a lot of people who think about, if I buy here and it goes back to 12, I'm going to make 200% on my money. And they don't pay attention to what's really happening in the stock. Well, it's a good value here. Whatever the excuses are, when you have a stock that drops like this, it needs to form a base over a long period of time. That could be a month. It could be 6 weeks. Could even be a little bit longer than that. Along the way, you're going to see a double bottom, higher low. Okay, first sign that there are buyers. Then you're going to see a little bit more support, and the stock continue to make it higher and get through some technical resistance levels, maybe a downward sloping trend line. But the point is that it takes time. And an analogy that I came up with when someone asked me about Tesla, same type of situation, is somebody has lied and lied and lied and lied to you over and over and over again. But this is the time that I'm going to trust them. Why? Well, because they've lied so many times that they've got to be telling the truth now, and because everybody else feels that they're a liar. So I think they're going to be telling the truth now. Are you kidding me? And that's what you're doing when you're buying a stock like this. It has to regain our trust. And the only way for it to do that is to prove to us that it's not going lower, and to prove to us that there are buyers starting to come into it. And only then can we start to think about possibly buying the stock. And even then you take a small position and then you add to it as it continues to earn your trust.
Tazzle, again, thank you. Trying to drop bad habits. You know, when I was in college, I loved barbiturates. Oh my God, loved them. They were great. Make you feel sideways. Fantastic. Until you wake up in the back seat of a car and you don't know whose car it is, and there's a 6-month-old bottle of Malibu rum that's been sitting out in the sun all summer, and you know the reason it's half full is because you clearly drank the other half, and you don't know where you are, you don't know where the damn rum came from, and you don't know whose car you're in which case you realize, well, shit, I really got to stop doing barbiturates. That's dropping a bad habit. So try not to hit rock bottom before you do. But unfortunately, a lot of people need to. Let's see here. Off barbiturates and on to a larger macro question. I always hear cut losers quickly, but how quick? Looking at UNP, for example, the price action would have me nervous today. Well, you shouldn't be. How do you decide how much of a pullback is acceptable in a trade? I mean, that's a core question, isn't it? Right? The answer is the daily chart. It really is. It's look at the daily chart. If I look at the daily chart for UNP, is it still bullish? Yes. When would it not be bullish? Well, if it fell below 246.70, then it would no longer be bullish. It would be breaking compression to the downside. But as long as the daily chart has this stock up in towards the high of compression, then I believe it's just bouncing off this ascending resistance here, this line that comes in from 1-2, and going to break above it to the upside, in hopefully in a fairly strong break upwards. But I would be worried that if the market obviously starts to drop and doesn't help out here, and the stock becomes relatively weak during that market drop, well, then yeah, it becomes a problem. But we're nowhere near that point yet, and so I wouldn't.
Yeah, and the answer to that, I just wrote an article. It's more like a chapter in a book. It goes through all of the different scenarios. You have to stop thinking in 2 dimensions. The SPY dictates what's happening. We're trading the SPY. We're trading the market. We just happen to be finding the fastest horse, and that's what we're riding. So all along the way, you're evaluating what the stock is doing relative to the S&P 500 and the market, and you devise your game plan accordingly. This is a swing trade for Harry. So he's not going to worry about what the wiggles and jiggles are during the day. He's going to take a look at it before the market closes, and then he's going to decide if everything is still intact. If it is, he stays the course. Gee, does the market look good? Yeah, the market looks good. Gee, does the stock look good? Yes, the stock looks good. Is it a choppy stock? Yes. To what degree can I expect a pullback? Well, to this breakout, I would expect that to hold. Anything down to this breakout, I'm fine with. Let it move around, and eventually it's going to gain its sea legs and move the way I'm expecting. So yeah, all systems go on that.
Huh. Let's see here. Anything else that we have? I do think there's one more question here. I see. I really like MASI. I think I saw that in the chat room as well. MASI. MASI. I like it. I like it's filling the gap here. There are no options on it. That you said, is that true? Is that correct? Yes. Let's see here. Yeah. No, there are options on MASI. I don't know why you said there. There are options. They're monthly options. But the bid-ask spread on this is pretty wide on these calls. So you're probably better off with the stock if you can afford to get the stock. The at-the-money options on it, you can get for $4.50 probably. The 135s, you're paying a decent premium. Those expire next week. I like the stock. I'd probably buy the stock and not those options. But you also have right now, draw yourself that line. You take a look, go to the top of 111, draw the line, connect it, connect it, connect it, connect it. And where do you wind up? Right to the top of today. Right there. It's connecting right into 129, again to 131, then to 21, again to 22. So you have like five touches on this line here. And I would just draw that line and set an alert, which is also, the alert comes in right at the high of day today, but set the alert on the line. And if it breaches it, then go on.
Which, by the way, I'm glad you're looking at stocks that have poor option liquidity. Just because the stock doesn't have good option liquidity doesn't mean that you don't trade it. That's how a lot of people operate. Well, if I can't trade options on it, I'm not going to even think about it. You're going to miss so many fantastic opportunities because the chart is perfect. So just trade the shares of the stock.
Steve is doing a time spread. Let's see if this is good for the challenge. He is doing a Disney time spread. Disney has earnings tonight, and that's why he's doing a time spread, because it's an earnings time spread. And again, this is a trade that after hundreds and hundreds of attempts at doing time spreads, there's been a sort of like an 85, 90% win rate on them. It's been tested. It's been shown. You have to look at stocks that have a good IV differential between this week and next week. And in Disney's case, you have a 95% IV at the money this week, 50% next week. So you're getting almost a 50% drop in IV. That's what you want to see. And two, you want a stock. And if you go right here to Option Stalker and you type in Disney and you look to see the percent of time the stock has exceeded earnings. You take a look here. Where is that?
20%.
View. Market. Wait, no, there. Where is it? I'm looking for it here. What percent of the time has Disney exceeded its earnings?
It's right at the top. It's 20%.
20%. There you go. So 20% your cutoff, right? You don't want it to exceed earnings more than that. It becomes a good trade. I might actually do this for the challenge. Try to get it in for like 35 cents. And, I can do, let's say 10 of them for 35 cents. Someone try for 34 cents. Maybe I'll do 10. I'll do 10 of those for the challenge here. The idea here is to go through, let's see here. Wait, hold on. Buying, so you're buying the 98 calls, and then you that expire this Friday, and then you are selling the 98 calls that expire next week. And let's say you put that in for a 33-cent credit. And for some reason, it's rejecting it on my $12,000 account. I'm going to figure out why that is. But the idea here is that if Disney comes within the expected earnings range, and you can look at that by just adding up the price of the at-the-money call with the at-the-money put. So you're expecting around a $5.50 plus or minus movement. As long as Disney moves within plus or minus 50 cents, you are going to take advantage of that IV differential. The IV will drop more tomorrow for this week's options than it will for next week. And because of that, your options that you sold will produce a profit. And you can probably get those for 37 cents. And then tomorrow, hopefully close the trade for, I don't know, 50, 60 cents. So you should be fine. Disney, I like that time spread there. So you're selling this week's 98s, and then you're buying next week's 98s, and you're doing it for, I'm sorry, I said the opposite before. Whoops. You're selling this week's 98 and buying next week. And right now you could probably do that for around 40 cents. And I'm going to try to get 10 of them here. Let's see. And there we go. Got it. 39 cents. I got it filled for 39 cents. So that is another challenge trade. I did a time spread on Disney. And if you don't know how to do those, look it up in the wiki or in Pete's articles, or Dave wrote a bunch of stuff on it as well. Okay.
All right. Yeah. So this is a feature within Option Stalker Pro, and you can see the companies that are going to be announcing today after the close or tomorrow before the open. This is your last chance to trade this stock. It's also nice because you can go in and see which companies are going to be announcing, so that if you have positions in any tangent stocks or in any of these underlying stocks, it's a chance for you to exit that position before the earnings announcement. But the way that this is arranged, you can see by option liquidity with the stocks with the greatest option liquidity at the top. And then what is the expected move? And we derive this by looking at what the option premiums are for the nearest term at the money calls and puts. What has the average move been over the course of the last 3 years? How many times has the stock exceeded that average move? So obviously we want that number to be very small. We want the stock to stay in a tight range, but we want those option implied volatilities to be juiced. So then we look at the money IV this week, next week, and then we get our differential. And you can also see the option volume. Save, I just looked at, and you can see that it has big option implied volatility, 1.52 versus 67 cents next week. And you can see that the times exceeded is 0. So it always has a tendency to stay in that range. But you can also see that the expected move is 24%. When you see something this good, you got to kind of wonder what's going on. What do they know that I don't know? And if you look at the chart, you can see that Save has actually had a big, big drop. And I believe there is takeover news on this one, or possibly some bankruptcy news. Yeah, actually, I think it was JetBlue that's looking to buy Save, if I recall correctly. But big moves like this, you don't want to see any kind of big move, because then the stock is going to make a big directional move one way or the other. And that's not what you want when you do these calendar spreads. You want it to stay within that expected range.
I'm going to run through real fast, because we're probably coming to the end of this. Some of these here. So M70122 is new to this. The time spread is call put future trading. I'm not going to answer your question. The reason I'm not, because you need to do your research. I said time spreads, there are articles written on it, articles on how to do it. You shouldn't be doing it. You shouldn't just be A, following the trade, and B, you certainly shouldn't do a trade you don't understand. It's a spread. You need to look it up. It's in the wiki. It's in Pete's writings. It's in Dave's writings. It's like everywhere. You just have to search for it on the subreddit in one option. Everywhere you look, you will see how to do time spread. Just go to the wiki in the subreddit and type in find time spread right there, earnings time spreads. That's how you do them. But don't do them the first time you read it and go, oh, that's how I do it, and you go in. I talk Wiki 2.0 is in the works. Yes, it is. Don't have her time frame or release date when it is, but it will be more advanced methods. Do I like Agilient, whatever the fuck, stock here? A is the symbol. No, I don't. I'd wait for it to break out of this compression. I do like it's bouncing off this 50 SMA, but as we said earlier, there are much better stocks to take. It is down today, but it's not a good short because you have support right below it. Not a good long because it's down today. Snap again, down a bunch today, but I would not short it this far down. It's very extended. Home Depot, we talked about Home Depot, like Home Depot. TXT, Pete, you should look at this one. I like TXT. I hate the volume on it, but I like the daily chart. What do you think of TXT?
TXT. Yeah, nice little compression breakout. It's been able to hold the earnings gap, and now it's starting to show its true colors. The buyers are lining up. This is a big long-term compression right in here. The longer and narrower the compression, the bigger the breakout, the more sustained the breakout. Yeah, I like TXT. That is actually very nice. Take a look at the 5-minute action. Yeah, I mean, it can be pretty light on the volume at times, but yeah, this is decent upward price action. I think this stock is going to continue on that breakout.
That's a very good call out. Thank you, random guy. Great call out on TXT. We both like it. CRISPR, I was in CRISPR. I went to cash, but I do like it. It looks like it's staying above its SMA, and it's going to break compression to the upside soon. I'd wait for that. I put an alert on the top end of that compression, give it some space, and then you can consider going back in long on CRISPR. And then the final two here, is it safe to go Tesla long? In my opinion, hell no, hell no, hell no. No, it's not even in the gap right now. Again, if you're looking at Tesla and you think, oh, this is a good time to go long because I don't want to look at it in 6 months. It's at 280, whatever. A, you never would have held that long. B, at least wait till it gets in the damn gap. And that gap is all the way up around 193. Let it break 200 confidently, and then think about going long Tesla. And then finally, Snow, same thing. You see a stock in compression in the daily chart, just put an alert on the top of the compression. Wait for it to break it. Wait for it to confirm it. Don't rush into it. And when that happens, you'll have a good long.
So in conclusion, is there a long that you want to highlight? What do you like? I know you like, we know you like Meta. I think we both like Meta.
Home Depot is my pick.
Home Depot. All right. I like it. It's right on this, trying to break through this little horizontal resistance level. We got earnings still a couple of weeks away, so there's plenty of time on that. That looks good to me. And I am probably going to look at PANW. I like this little breakout on SHOP, Shopify. That looks pretty good to me as well. Fairly choppy stock. Earnings the 13th, so we've got about a week left on that. So we're still kind of navigating some of the earnings announcements. But I do like that PANW breakout. And it's just, I love the compression. You know, the nice thing about buying compression breakouts is that you don't feel like you're chasing. So the stock has had lots of time right in here, and buyers have finally exhausted the profit taking and the selling pressure, and then it stages its next leg higher. So yeah, I think that's going to be my my pick of the day. And I do still like IBM. Netflix was one that I liked too. I think that one I posted recently. That is getting through that gap up digestion phase. So you've had plenty of time for the stock to show its true colors and to hold that AVWAP-E. I like Netflix, and yeah, I think this is where you can start considering selling an out of the money bullish put spread down around that 540 level, 540, 535 for a credit of $1. That will work. Hopefully you can do that inside of 3 weeks, but you can go 4 weeks out on it as well. Market is currently grinding higher. So remember, back in here, I said, we got a double top, lower high, HPQ. Let's take a quick look at what HPQ did. We were not going to take that trade until we had confirmation. Long red candle through that VWAP. Never got it. Okay, well, what did the stock do? Nothing. Sitting right on the low. That is relative weakness. That's how the system's supposed to work. So yes, if market did crack down, and I'm not expecting it as much now because we just made a new high of the day, then this stock, the bottom would fall out. And to Harry's point earlier, 500, here we come.
All right, everyone.
All right, everyone, have a great week. We will see you Sunday. I'm going to do a recording as usual Sunday morning, and I'll help you set your week up. Thanks so much for attending. Please leave your questions on the live event video, and we'll see you soon.
See you
Thank
then.
you, Harry.
Bye-bye. Thanks, Pete.